Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market analysis update for Chainlink. We're going to talk about this longer-term zone, that range that we have from the support at $5.70 to the resistance at $9.50, and why I would consider this to be longer-term accumulation. We'll cover some moving averages and some other levels, especially on the weekly chart that we can watch out to, as well as the link Bitcoin ratio and some very positive signs starting to play out on this chart. So I hope you guys do enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. I am fairly active over there as well. So I do want to start off on the daily chart with Chainlink and talk about this range that we've got going with, again, the support at $5.70. That is the level in which Chainlink has held on multiple attempts, going all the way back here to this first retest on the May capitulation. Chainlink was able to bounce off the zone. We had another retest right here in June, continued to retest it in July, and then just in the last few weeks, we had more retests throughout November, continuing to bounce off this region as longer-term support, and now we're getting that follow-through back up above the middle of the range. And the great thing about this chart for Chainlink is the fact that on this most recent leg down that we had back in November, Chainlink continued to hold its zone of support. It didn't make lower lows. It didn't have any sort of breakdown. In fact, we've seen a very positive reaction off of this zone. And that is dissimilar to a lot of other altcoins where we've seen so many various altcoins have a breakdown of their structures. And just to name a few and some examples here, we can look at Avalanche. That started to break down. It's lost its level of support. We can look at Cardano. That's also had a very good illustration of what's happened where we've lost this zone of support, concrete level, continued to bounce off of it, and then we got that breakdown in October and then some fall through in November. And then lastly, here's another example of Solana. This one a little bit more pronounced where we've really just seen a huge correction back, taking us under this level of previous support at $26. And if you just contrast that to Chainlink, again, it's holding a lot of relative strength here, best illustrated by the Chainlink Bitcoin ratio, which has been outperforming in this uptrending channel where it's got some higher highs and higher lows. So all of this is really positive, and I do like to see that relative strength continue to play out. And that is what leads me to believe that we are in some longer term accumulation. We have a lot of demand coming in at these lower valuations, and we're just continuing to oscillate sideways ever since really entering this range back here in May. So I do want to talk about this yellow line here. This is the 300-day simple moving average. It really hasn't been too relevant for Chainlink over the past few months, considering it has been somewhat of an unreachable target, but it has started to get closer and closer to where we are today. It's averaging down pretty quickly, and the last time we had an interaction with the 300-day average was all the way back here in January, and you can see on this move, Chainlink had some daily candles coming up to this level. Ultimately, though, we had that rejection off of this level, and then we continue to come back down, forming lower lows. So this level, the 300-day average, is coming in at $9.42 today, also corresponding to the range high. So watch out to that as our longer-term resistance. And any move on a breakout above either the range highs or the 300-day average will be a very bullish sign that I will be looking for as a potential scenario where we might start to see the longer term accumulation zone come to an end and we might see a new uptrend start to form. So I also do want to talk about the weekly chart. And with this, I want to focus on these two weekly moving averages, the SMA 20, which is the red line, and then the EMA 21, which is the green line. I have them as a band, and this is something that we've been covering for Chainlink in almost every single video, not to be repetitive, but just to emphasize the importance of this level that has acted as strong resistance throughout this bear market. And if we go back here, we can see this was strong resistance right here in January, big rejection off this level, and then we continue to roll over. Another rejection right here in April, same pattern, continue to break down. But over the last few months, we have had more and more retests, but we haven't had that breakdown. We're actually starting to see this start to roll off where it's no longer got this very aggressive downward slope to it. So that really does tell me that the momentum of this downtrend is starting to slow down. And if we do have a breakout above both of these moving averages, that will be a very bullish sign in which we might start to see a retest of the range highs. And then from there, we just have to wait and see and play it level by level. However, if we do have a rejection off this level, then really watch to see if Chainlink is able to hold support at the range lows like we did on this previous move again in the middle of November. So lastly, I do want to talk about the Chainlink Bitcoin ratio. And this is a very positive looking chart because we have some higher highs, higher lows, And most importantly, we're starting to see the 200-day average, which is this green line, start to slope upwards. And that is a great longer term signal and indicator that we could be reversing this big downtrend that we've really just had ever since that peak back in the DeFi summer of August of 2020. So if we are able to have a longer and more extended rally up instead of just forming some of these lower highs, that longer term outperformance with respect to Bitcoin could be very beneficial to Chainlink on the USD pair and could lead it to exit some of these accumulation zones and hold that relative strength, even if Bitcoin isn't necessarily able to break out above its own range. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.